Hello. Today I would like to share with you the 22 results for CCR Re. In 2022, CCR Re delivered a clean sheet in a turmoiled market. First, the operational performance was in line with the one of the 5 previous years and the 5 years to come. The turnover grew by 17%. The attritional claims ratio and the expenses ratio kept decreasing, and the return on investments began to increase thanks to the increase of interest rates. So in total, 2022 was a year of continuity. At the same time, 2022 was a year of disruptions. First, the disruption of the resurgence of inflation, disruption with the comeback of war in Europe, disruption with the extension of the impact of the climate change across all the continents. The specificities of our underwriting policy in terms of geographical scope, cat exposure, and commitment rules protected ourselves against the 2 later shocks. The same DNA of prudence led us to increase massively our reserves in order to tackle the inflation risk. The impact on our technical profitability was 120 basis points for the life margin and 560 basis points for the combined ratio. However, our combined ratio stood at 98.7% and our life technical margin at 3.6%. And in total, with the good investment results, the net income for the year was 42 million euros, above the net income for 2021. For 2023, the perspectives are even better, thanks to the favorable duration gap between the asset and liability side of our balance sheet. The interest rate increase in 2022 increased the solvency margin of CCR Re. Then you can imagine that CCR Re is well placed to benefit fully from the new market environment with the increasing demand for capacity and the increasing tariffs. So more than ever, CCR Re is pursuing its marche en avant toute. Thank you very much.